Question about the VIX. The super low VIX / short VIX position is concerning. How else can it play out rather than a violent, rapid rise up?
It could just persist, but what you can see, if you go back to that rate of change chart on the VIX, Josephine, if you go back to that, I don't know if I can draw on that this morning, but you can see that that chart doesn't hold in one spot, okay? In fact, throughout the bull market, what happened, when we were bullish, by the way, like raging bullish on buying every damn dip in the US stock market, all the way up until September of last year, look what happened. This is one of the main reasons why we stayed bullish. I mean, away from the economic data, the market signal continued to say, buy the damn dip. Volatility. You know, just, this is pervasive, right? This starts in, starts making lower highs back in here in late 16 and throughout 16 and then through all of 17. Much different than this. Boom, straight down, right? After going straight up. Of course, everybody on TV nailed every part of these moves. We understand it. A lot of them are just trying to get back to break even in a lot of different things. But the main thing about volatility is to never, ever, never, never, ever, 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 ever expect that to be a smooth and, again, predictable line. That's the whole part about Benoit Mandelbrot or anyone who's studied markets on a fractal basis. The volatility of volatility clusters. It's episodic and non-trending, and then boom, you have it, comes back. And then it might trend again. Then you're like, oh my God, that can stay high for a long period of time, or not. So again, that's the nature of markets. There's so many participants, there's so many conflicts of interest. So many people only get paid if markets go a certain way. So again, think about it all in the context of what you actually have in that picture, and what you'll see is that you had some pretty some of the most violent moves, as I said to one client over the weekend in an email. He was all in a tizzy, because he's like, you didn't tell me to buy the SPYs on December the 24th. I'm like, come on, man, are you gonna waste my weekend with this bullshit? I mean, seriously, we just had some of the most erratic moves in the history of markets, lowest December in the history of Decembers, ever, okay? And I saved you a lot of money there. And now we got governments making up the number. We're into this quad, back into that quad. But again, this is what it is. The market is set up to frustrate people. And this person in particular was quite frustrated. And I think he wanted to blame me for it.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, Plus, Macro Select, and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.